Boys, gentlemen, welcome back to the channel. Boys, in this video we are speaking about how to identify higher time frame biases. Okay, what I consider higher time frame are mainly like daily, 4 hour, things along those lines, weekly, obviously monthly. Those ones we don't take too much into consideration, but still take them into consideration. Now, the reason this is so important is because the way we trade, it's top-down analysis. And so what that basically means is you start at the top and then you make your way down, right? Now, on top of that, it's also a very crucial part of the entire strategy because once you are able to make your way to the lower time frames, catch those entries, the goal here is to have those higher time frame take profits, right? And so what this allows for really is the coming together of the higher risk to rewards, right? Of being able to catch those positions in line with the overall higher time frame bias, which leads again to the 3, 4, 5, 6, 7, 8, 9, even 10 to 1s. We caught a 12 to 1 on USD CAD. I believe it was 2 weeks ago. Why? Because we were able to get a lower time frame entry, but have our higher time frame take profits, which was literally just like a daily low. And so that's what we're going to get into. It's really simple. I'm going to keep this video as simple as possible. If you guys have been watching my channel, you guys know I don't like to overcomplicate things. We keep everything super, super simple. So for the sake of time, let's get into it, man. Now, boys, this is a great example on NZD USD because there's two different kinds of ways to look at it, and I'm going to explain them exactly. Okay, so if we literally just look at what we have here on the chart, right? Something to consider before we actually talk about this is, guys, I consider wicks above highs or lows. I do not consider those like breaks of structure. Wicks on candles, I consider mainly like things as far as liquidity sweeps, maybe just like mitigating an area, tapping into a zone. The main breaks of structure, what I look for are candlestick closures. Okay, so with that in mind, let's take a look, right? So if we just wanted to look at, let's just take this right here, right? Basically, we have this low, we have this high. We have this low, what do we have? We have this high. We have this low, and then we have this high, right? And so literally just as simple as that. That's literally, like, it don't get no simpler than that, bro. Like, it really doesn't. You just are identifying that. You can pull it away from the chart. You guys can clearly see that we're bullish, right? And so then to what you would then do, right, is pretty much mark out your zones. So I don't like the color of that, but we'll just keep it like that for the sake of this video. You would mark out your zones, but this is going to be a separate video. And then you would do the same exact thing on those time frames, but we can do this a little later on in the video, right? And so now that we have that structure outlined, what happens next, right? You guys can see we have a clear push to the downside that breaks below this low and then a test into this zone and then boom, again, a break. So what would we consider this? We would consider this, guys, the shift in structure, right? Literally, why? You pull it away, bro, you can see that we broke structure right here at this point, below this low. And it's literally that simple. It's literally that simple, right? And then so what do we see technically after this, right? We have our new zone here that then we would typically want market to pull back into the supply zone to then what? Take market to new lows. Now, is this always going to play out? No, of course not. This is where you have to take like higher time frames into play and things along those lines. But then what you can analyze is just as previously said, where if you're looking at the time frames, so we start here, high, low, high, low, high, right? And just like that in itself, you could have caught so many positions just understanding that you are taking these highs, right? And then what do we see after that? Again, boom, breaks of structure to the downside, retracement, continued breaks to the downside, retracement, continue breaks to the downside, right? And this is, I explained this position, I believe it was in last video or the technical analysis video, but same exact thing. And then I have this thing in my, like just with the way we trade, I call it first come, first serve, where essentially you guys can see that we have two supply zones, right? One here and one here, both really nice validated zones because of the imbalance and such. But one moment. But with first come first serve, that really means like I'm gonna go after uh, the first one that came, and then we're gonna trade off of that zone, and then I'm gonna take this one short every single time, even if market decides to push higher and come back into this zone to then continue further. But then again, we would wait for price to come in here, same price action, and then continue lower, right? And so that's literally like, it doesn't get any simpler than that, guys. I literally just identify the highs, the lows, the highs, the lows, and I don't overcomplicate it. Now, I think the reason a lot of you guys get so confused and so caught up in a lot of the other bullshit is because truly when stuff just isn't clean, you try to force and make sense of stuff that doesn't make sense. And this is a big part of what I want the message to be on this channel, bros. Like, when it's not clean or when in doubt, just stay out, right? Like, when price action truly isn't clean, you need to stop forcing setups and just either move on to the next pair or just stay out of the market in general. Like, when you can't make a clear picture and put this picture together on what's going on, just leave, bro. Literally just leave, okay? But with that being said, anyways, so first things first, what we could technically do is just looking at any of these trends, whether we have this basic trend where we have this boom, 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 right? Obviously, zooming out, clear bearish market, right? But what we can do is we can go to the 4-hour to help you guys understand what it really is that we're doing on all these time frames is the same no matter the time frame. Okay, so if we really just look at any of these over here, okay, it's literally the same exact thing, boys. So on the daily, this pretty much looked something like this, right? We had the point here, we had the high, we had the low, the high, the low, the high, right? Just like that. So on the 4-hour, obviously what we're going to do is pretty much just mark out our zones. This is a huge imbalance. If we wanted the refinement, obviously it would be something along these lines. What can we see happen? We see this nice price action. We have this beautiful liquidity sweep, taps into an imbalance, into the zone. Then what do we have? A nice and clear break. So we have the sweep, break to the upside. We come back to literally test the demand zone, and then, just simple as that, we take market to the highs after we tap into the zone. And then we literally look for the same exact thing on the lower time frame. And you guys can literally see an entry that I had on this pair, right? Just breaking this down again for you guys, going basically back testing after it's already played out. But it's that simple, right? And so you just do this on every time frame. And so again, the reason I would not have looked at this is because this, let me go ahead and delete this actually also, you guys don't get confused. So guys, the reason I'm not looking at this point right here is really simple, right? Because if we look at the structure, did this break above here or anything like that? No, we had obviously these wicks that like took these highs out, but nothing was broken, right? And so then what do we see the price action do? We literally see it sweep to the downside, no close. Then when do we officially have the break on the 4-hour? Here, right, with these candlesticks, right? And so now that we've officially broken this zone here, this is now, right, me being able to just identify structure and then test again into the demand, and then boom, now we're taking market to the highs, right? In simple, obviously this would not be my entry, but hopefully you guys get it, right? Now we're obviously not trading one-to-ones, but hopefully you get it for the sake of this video. And so it literally just doesn't get any more simpler than that, guys. Like in its most simple form, that's literally like a big part of this, okay? And this is when you're really getting into the understanding of like protected lows, and when you're in line with like the daily time frame, the 4-hour time frame, you'll notice how depending on the trend, there's always going to be the lows or the highs that are typically protected, right? And so you can look at the same exact thing here. Like if we just do this on the 4-hour, What do we see, man? We got the obviously the low, right? And then like it's just lower low, higher low, lower low, higher low, lower low. This one, yes, obviously like it gets a little bit choppy here, but if we go on the higher time frames, 12-hour daily, you'll probably see that this is like a supply zone in here or a retracement. And so this is why you can't just look at one time frame. You have to learn to put and draw the whole picture to understand what's going on. And I think that's a big, big part of the downfall of so many of you guys is your inability to look at the market as a whole and draw that picture out. Instead, all you do is you go to like one time frame and try to draw this picture when you have no overall like understanding and perception and perspective of what's going on, right? And this is why, again, we do something called top down analysis, right? Because you can't just be so zoomed in, and this is honestly a big problem that I had early on, where I was just so zoomed into one time frame, and then I wonder like why I'm getting taken out, and then all of a sudden market's going in the direction or in the opposite direction. It's because, oh, like on the higher time frame, this is what we were looking at, and this is why it's so crucial to stay organized and just really simple and draw out your zones. That's like a big part of this. Always draw out my zones, and that's why I keep them labeled so I can always know and be aware of like where I'm at in between my zones, where I'm at, and not trying to get too caught up into the lower time frame. So like organization is huge, right? And then literally once you do that on the daily and the 4 hour, you just do the same thing on the lower time frames to find an entry. You wait for the point of interest and the zones to be tapped, and then the shifts in structure, the price action, the liquidity sweep break of structure, boom, test in that zone, and we take it to the lows or the highs. If we look at this on USD CAD, I believe it was super clean as well on the 4 hour. And on the daily, I believe I broke this down in one of the last videos as well. But just to keep it super simple, like if we just start at the low here, you guys can see we got the high, lower high, or sorry, higher low, higher low, higher high, higher low, higher high, higher low, higher high probably is what's going to come from this, right? Pull it away, what do we see? You know, boom, clear bullishness, right? Like it's super, super simple. Don't overcomplicate it, right? If I can identify this as quick as I just did when I'm doing like my analysis, pre-market analysis, or like my weekly overview, I don't even look at it, bro. I don't even look at it. If I can't make sense of it, again, when in doubt, just stay out. So then we have our zones marked out, and then I would do the same exact thing on the 4 hour, right? And so you guys can see here, get my zones marked out, and then we can just start here at this point, at this high. So we have this, right? So we got the low, lower low, lower high, lower low, lower high, lower low. We have some liquidity here being swept on both sides, liquidity swept. We have the, or I guess we can do this. We have the break of structure, the tap, and the test in the zone, and then obviously you can find an entry in here, and then continued break because we're shifting. You guys can see price action shifting on the 4 hour. Again, continue to shift, and then watch what happens when I just pull this away. Do you guys notice how clean this is when you're able to just pull it away instead of trying to get all caught up in these wicks? What is happening here, right? You guys can see it's like a gradual shift, right? It's super simple, and that's it. And this is how you guys can identify the shifts in structure. It's like a gradual, like gravitational kind of fucking thing that happens. And you just keep it, again, super simple. Don't overcomplicate it. I think that's where a lot of you guys get this stuff wrong, is trying to, again, just make sense of shit that don't make sense. And honestly, I don't really like the way this USD CAD has been playing out, or just moving in general, because if you look at this, there are so many wicks, bro. Like look at all these wicks in the price action. Like it's still clean and still moving and upholding structure and stuff and such, but just look at how much is going on with all these wicks. And so that's just been like mind-boggling to me, even though we had this all drawn out and such. So just stuff to stay aware of, and like obviously market experience, identifying certain characteristics about certain pairs. But again, you can do this on any pair, right? And it just gets super, super simple. And so I literally just wait for candlestick closures, the breaks of structure, understanding of my zones. Again, this the most important part of this stuff is understanding the overall picture of what's going on and not getting too caught up in like, oh, all right, bro, like what do I see on the 5 minute? Like I see a fucking, all right, boom, let's mark out this zone here, and we're taking market to the lows, right? Like, you don't even know what's going on, bro. Like, or thinking the exact opposite, like, oh, all right, so we had this, we have this break here, broke structure, like we're gonna tap here, and then boom, we're going. Like, all right, bro, like, yeah, we got this imbalance here in this zone. We tapped into it. We're seeing like a break right here. Um, Boom, like we broke structure on this 5 minute right here. So like I'm taking this stop loss below this low, and we're taking market to the highs. Like how do you even know? How do you know that? Like, what are you looking at that's bringing you to that conclusion except for what you're seeing right here? And again, this is why I stress the importance of like the top-down analysis, of the staying organized and marking out your zones. So boys, hopefully you guys took something valuable from this video and were able to just kind of get a little bit more of an insight to like the daily bias, the 4-hour bias, understanding the importance and the role it truly plays in like the top-down analysis. But with that being said, that sums it up for this video, and I will see you gentlemen in the next one.